Good morning. My name is Adolf Sure, and this morning I want to present to you a topic called Cashbook, which is one of the topics in financial accounting. Welcome. A cash book is a book in which an accountant records the cash transactions that happen in a business. When I talk about cash transaction, I mean the transactions that involve the immediate exchange of cash. So when I'm speaking about a cash transaction, I want you to broaden your way of thinking and understand that apart from it, meaning that you're going to have an immediate exchange of the cash in hand, the liquid cash, we are still also going to talk about that cash that has been received or paid through the bank. Yeah, so the bottom line here is that we're going to talk about transactions that involved the immediate exchange of cash. So if I purchase something today and I pay for it in cash, or I purchase something today and I still pay for it by my check or through the bank or through my M-Pesa, those are the transactions that need to be recorded in a cash book. A cash book has two sides. In a cash book, we'll have the debit side and the credit, just like any other account. The debit side will record transactions that involves cash receipts, meaning that when money comes into my business, when someone gives me money, when I sell and I receive money, that transaction will need to appear on the debit side of my cash book. While the credit side is going to record transactions that involves cash payments. That means that when I pay for something on cash, or pay for something through the bank, or through the checks, then that transaction will be recorded on the credit side of my cash book. Cash books are of various types, and when we talk about these types, the first one is the one-column cash book. Now, when I talk about a one-column cash book, I mean a cash book with only a single column, and that column is for cash. So when I talk about a one-column cash book, I'm basically talking about a normal cash account in the ledgers. The next type of a cash book is what we call a two-column cash book. In a two-column cash book, we call it a two-column because it is a cash book with two columns. That means on the debit side, I'm going to have the column for cash and also bank. So when I receive money, I'll record it on the debit. When I receive it in cash, I'll record it on the column for cash. When I receive it through the bank or into my bank account, then I'm going to record it under the column for bank. So both sides of the two-column cash book has the column for cash and bank. Cash, bank. And also the other side, which is the credit side, also has the column for cash and bank, and that is what we call a two-column cash book. But remember, the principle of a cash book remains the same, that when you receive money, you record on the debit. When you give out money, you record it on the credit side. The next type of a cash book is what we call a three-column cash book. A three-column cash book, just like the name signifies, has three columns. We are going to have the cash column, we are going to have the bank column, and there is also an additional column that we call the discount column. Now, remember a cash book has two sides, the debit and credit. So on my debit side, the three columns I'll have is the discount allowed column, the cash column, and the bank column. So if I sell something and of course I allow some discounts, yeah, and remember paid in cash, I'll record it on my debit side. Yeah, record what discount did I give out or did I allow, and then also record whether that money was in cash or came into my bank account. Yeah, and what happens on the credit side of the three-column cash book is that I'm going to have the discount received column, the cash column, and also the bank column. So if I purchased something and I'm given some discount, I'm receiving discount from maybe, let me say, a wholesaler, then I'm going to record it under the column of discount received. And then I record whether that amount of money I paid using cash or bank. And then I'll be through with my entries in the three-column cash book. And then the last type of a cash book is what we call the petty cash book. A petty cash book, just like the name suggests, is a very petty cash book. Because in a petty cash book, we record small cash transactions in the business. In a petty cash book, we are going to record when we receive small amounts of money. In a petty cash book, we are going to record when we make payments that are small. For example, if I'm going to an organization, a big organization like Safaricom, when it's going to take care of its petty expenses, for example, having to pay a border person 100 shillings, that transaction is too small for the organization to have it in a main cash book. So what the organization will do will have a person we call a petty cashier who will be given money at the beginning of the month. The petty cashier will use this money to pay for very small payments that are made during that particular period of time, and then at the end of the month account for the money that he was given. So the book that the petty cashier maintains is what we call a petty cash book, a very interesting cash book. So of course I've said and I'm repeating that he will receive a certain amount at the beginning of the month, spends it on the petty expenses, and then at the end of the month make what we call a report on how much he was able to spend, or rather account for everything. So this is what a cash book is, and the basic thing here is that in a cash book we don't record credit transactions. And mark this one well, there are no credit transactions that will be recorded in a cash book unless it was a credit transactions and now the money is coming in. So we only record when money is coming in or going out. Yeah, that is what a cash book is. Now, in my next presentation, I'm going to talk, or rather come up with an example and show you how we prepare a cash book in our organizations. Stay tuned for more. Welcome.